Alright, yo, welcome back. So it's Sunday today, and I'm basically gonna do my analysis for upcoming week. So this is how the chart is looking right now. Previous week or 2 weeks ago, we had our accumulation week. So let's grab the calendar there. That was this week, or that was the accumulation week. So this was 2 weeks ago. This was like my accumulation week, which I said as well. And in the chart, you can see this week by Monday opening somewhere around here, making our original accumulation, our first stage reaccumulation, second stage reaccumulation, smart market reversal, and then this was the beginning of our second week. So first week was our accumulation week. Second week was our manipulation week. We had the manipulation here. And then this was also last week, but time wasn't aligning with it. So I think that upcoming week or the weeks after, we want to have our distribution week. So we took out the sell side here. So I and had our manipulation move here. So I don't really want to see NQ take out this low again, which I'm also not thinking it will happen. But what my bias basically is for upcoming week and the week after, or the weeks after. Actually pretty bullish. Also, I'll do my analysis on DXY as well, but I'm actually pretty bullish. If I get like a standard deviation off of like it's like the 2 hour lag, there isn't really a clear breaker here, but we have a B, C, D. So we have a B to C lag standard deviation. This standard deviation comes in line with minus 2.5, comes in line with the rejection block constant encroachment. So that does come in line with like my idea. And this rejection block, which is on the 12 hour, that's where my rejection block is from. So, or it's actually from the 18 hour. Or daily, sorry, it's actually from the daily. 2 days the same. Oh yeah, so max is like the 2-day. It's a 2-day rejection block. And then these standard deviations line up with the rejection block constant encroachment. And then also this small move here comes in line with this. We have another breaker here, so we have A, B, C, D. Then another standard deviation from this A to B leg, and this also minus 2 also comes in line with this rejection block constant encroachment. So this is basically where I want to see market react off of. I want to see us create like equal lows here, probably. So I have like a reaction of this daily rejection block and not take out this liquidity, because in my head I'm thinking like how I'm looking at this is that smart money bought here. Well, taking out the liquidity, so smart money bought here. So smart money is gonna protect their position right here. So they're gonna turn the market here sideways, or they're gonna turn the market here around. So somewhere around here. So my drawn liquidity is gonna be this minus 2.5 standard deviation, which is the rejection block constant encroachment. And then also this low here, we do have like perfectly equal lows here. So like a Judas swing could go to the upside in like even the Asian session. Asian session will probably take out this low. It's like right there. And then my overall drawn liquidity is gonna be these, which was like Asian session on Tuesday here. This was Asian session on Tuesday. Got a lot of equal lows there. So that's basically my drawn liquidity, and then max, which I wanted to see that is the rejection block constant encroachment. And then let's watch the calendar. So this is like our accumulation week. Then we had our manipulation week where smart money bought, like the manipulation here. So this is like the second week. And then third week. So this was, this is the upcoming week. We have on Monday, we have a bank holiday. So no trading there. Tuesday, we have no news, so no trading there. And on Wednesday, we do have FOMC. And on Thursday, unemployment claims, PMI, and then another Friday, no news. So it's basically going to be like, I'm expecting this to be like a distribution week if you look at it like the power of 3. But Monday is going to be our accumulation as well. Tuesday is going to be accumulation, and Wednesday we will probably have some kind of manipulation, and then Thursday is going to be our distribution, or it could even be Wednesday already Wednesday could already be a distribution. So from there, I'm looking at making that distribution leg for upcoming week. That's basically all. I'm kind of looking like this at like a market maker sell model or market maker buy model. So we have like this is like low resistance liquidity because we didn't take out any liquidity here. Even though we took out this liquidity, it's like not like we have like a big breaker. So this could be our like original accumulation. So I could mark this out here. Because we also, if we look at here, in this leg, if I make it this accumulation here, then we also didn't have any real, this is like a accumulation, like we didn't go really anywhere. Like we were going down, yes, but we didn't have like any manipulation leg. And on ES, we also didn't have any manipulation leg. So let's look at ES. So also on ES, we didn't have anything crazy of a manipulation with like a like a manipulation leg. We didn't have anything really. So I'm looking at this as like a market maker buy model. Let's see. So like we could have this on like the 5-minute. This is like the second or this is like the first accumulation. Then we have like this entire thing is actually our third accumulation. So we could mark that out as well, but here we did have that like that manipulation leg. But yeah, I'm looking at this like a market maker buy model, even though it isn't really a a good looking one. It's still going to be like a market maker buy model in my opinion, because on DXY I did like a small nest as well, and there we are pretty bearish. So that's kind of how I'm looking at it. Economic calendar is fine as well. Yeah, that's basically it though for this. And like previous week, what happened here was actually pretty weird from here. I was actually pretty bearish as well, but I learned from this that this is actually our original accumulation, so I won't go over that again. But we took out the equal lows here, so we finished the market maker sell model. We got this distribution from the upside, creating a breaker, also a unicorn here, tapped inside of the unicorn as well. If you make this like a singular one, I think it's the 45-minute it was. So we have two Fourier gaps here. 30-minute we have also two Fourier gaps here. So we have one here, one here. 45-minute we have a singular one. So here. Okay, I don't know what happened there, but so basically this breaker here, I'm making a singular Fourier gap, even though it isn't really really on a singular Fourier gap in this time frame. I still go to the time frame where we have like a singular Fourier gap, so this would be the unicorn. We'll delete this. That's actually also a unicorn, but I will show it. So we have like a unicorn here, singular busy. We get here, we tap it here. We also have an order block here. Let's go to the biggest time frame. We have an order block, so only 4 hours is also the biggest time frame for an order block. So right here, this is our order block. Don't even tap mean threshold here, but that's fine. You hold this unicorn. So if you go to the time frame here, so we could see that we have the breaker here, we have that unicorn here. We tap inside of that unicorn, we got big displacement through the upside. And from there, I projected a standard deviation from this B to C leg, this A to B leg. Didn't really add anything, so I'm projecting it from the B to C leg. Oh wait. Wait, what happened here? Wait. Wait, didn't I had it here? Oh yeah, I did it. I did had it from the A to B leg. So this A to B leg, wait. 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 I thought we had like a standard deviation lining up with this order block mean threshold. Oh yeah, wait. It's this here. Sorry. We also had a breaker here. It's like on the 15-minute time frame. I knew I was here on the chart. This was Tuesday in the afternoon, so I saw this happen. So I knew from this week trading that we had this here. So wait, where was that standard deviation? Oh wait, what? Oh wait, what? Wait, I'm so confused now. Wait, sorry. I really got confused on this one, but just noticed that my order block wasn't marked out good here. It's from this to this here. So this was the right standard deviation. So this standard deviation came in line with this order block mean threshold. React off fit here. It isn't perfect, but it's really close to what I was thinking as well. So we have that order block mean threshold. React off fit here. Have that smart money reversal again, and this could be like a market maker sell model again, or it is a market maker sell model. This BTC leg standard deviation comes in line with this liquidity as well, also this rejection block. And from here, it's just all the way down until this low. And this is going to be high resistance liquidity because we already took out these lows. So that's really what I'm thinking. And then if I continue my story, which from previous week, what happened. So smart money bought here. We had this breaker here. And from here, I was looking for this unicorn. So we had like 2 overlay gaps here. So again, I go to a singular overlay gap. So we have 2 overlay gaps there as well. So we have a singular overlay gap here on the 45 minute. Again, this breaker got lost inside of here, but it's still that unicorn. So from here to here, we have a singular BISI. If I go back to this time frame, then this unicorn does overlap with this breaker here. So that does make this a unicorn. So from here, it's just once we tap inside of that unicorn, that's your entry. Sub could be here, sub could be below this low. You just gotta know this through like back testing and like what works for you, because I've had it where I put my stop beneath here and then we rect off of here and then we tap the order block and then we go to the upside. Most of the time it's not really with logic, but most of the time when it's like a really big unicorn, really big BISI, then I just put it below here and then I don't expect to get it all the way filled. But if it's like a smaller unicorn and I put my stop all the way beneath the low, but it's like a really big unicorn, let's say like this is the order block low, then I use it right there. But that just matters with like time, where we are in time. So let's say we are on a high impact news day and market just opened and we're like right here. Let's say we are with this candle like right here. This is like market open, then we have like a Judas swing to the downside and then we go all the way up, but I'm not expecting this to get filled all the way. So like if time aligns with that and like how big the unicorn slash BC slash CB is. I react off the unicorn there. Standard deviation from this ADB leg. Didn't really give anything though. -2, -2.5 standard deviation. Didn't really line up with anything with it, which I wanted to see. So let's say you are right here. So let's say we were right here. And you don't know for sure, but this does make this market maker sell model to an end. But you don't really expect us to run through all of this, like this unicorn setup as well, after taking this sell side liquidity. You don't expect us to run through here and then take out this low, even though it's like it doesn't really happen a lot that we take out the liquidity and then go straight to the upside with like no manipulation, because this is the right time. It's like a bigger time frame. This was already manipulation, so we don't need another manipulation. So that's basically what I'm saying. But let's say we are right here and you don't know for sure that that this is like the low of the week. You don't know for sure, right? So you put a standard deviation on there from this ADB leg, and then -2, -2.5 standard deviation, -2.5 standard deviation lines up perfectly with this high. So this could be like your end of your TP. -4 standard deviation also comes in line with like this data high wick, which Dodgy really likes to target. It's like an 830 wick. So let's say you are in this 45-minute here, you have your entry here inside of this unicorn singular busy. You have your stop and eat here. So let's say I'm buying here. Let's say I'm buying with 10 contracts here. And then you just take your profit here. Minus 2.5 standard deviation. You sell half position here. You put your stop to break even. You don't get stop to break even here. And then from there, you just hit that target there and just out of the trade there. So that's basically it for that. And then further this week, so we had that unicorn, singular unicorn we had right here. Right here. And then from here you could put that standard deviation, and then your first target with the -1 standard deviation, which comes in line with like this mean threshold if you look at like a bigger time frame and this order block here. And then also like this liquidity, but it's not really that accurate for me. I want more precision. So this A leg B leg looks like the best standard deviation, -1 standard deviation. It doesn't really line up with anything, right? So don't look at that. If you look at like this with like the minus standard deviation, oh, the -1 standard deviation comes in line like this this busy here. Well, if you didn't target the -1 standard deviation, you will get like the perfect perfect high right here. But I don't look at it like that, because you will you will never get this like this. So just use it with like everything that you basically have, like all the PD arrays, you know. -1 standard deviation, look at it from the ADB leg, look at it from the BDC leg, and look if there's like a PD array, mean threshold, constant encroachment, or just a PD array matching with that, or liquidity matching with it. And in this case, it's the -1 standard deviation, which comes in line with like this order block mean threshold for me. So that's basically it. We tapped that unicorn there. And then further this week, we tapped inside of this 18-hour order block, which is like the mean threshold of this. We swept the data high wick, but also reacted off this order block mean threshold. So you have like a small retracement. Also, look at that, those low respecting them order block, using as a reversed PD array. So we had like a bigger push to the upside. Don't know what this basically was. What was this? This was like, I don't know what this is. This was like the order block inside of an order block reaction. Kinda. Let's actually see. What was this? Oh yeah, we had like equal lows here. Yeah, equal lows. So those want to get targeted. So we had like 8:30 news opening. We swept this high, and we still wanted to go for like this again. This market maker sell model is this. So we have like original accumulation here. Let's mark it out like this. Original accumulation like here, equal lows. Look at all these equal lows. Original accumulation 2, original accumulation 3. And then from here, it's basically already a smart money reversal. So we went lower here, had like a retracement lower, and then this news wick actually swept the smart money reversal. Right here, also time didn't really come in line with like this. So smart money bought here. At this top here, and then we had another smart money reversal, taking out these lows, equal lows, right here perfectly equal lows, and then here perfectly equal lows, ending the market maker sell model. Also tapping inside of this PD array, which is a singular busy, if we have it on the 1 hour right here. So 1 hour busy here, respected here, and from here we inverse this, we went higher, take out this this data news wick. Again, go above there. Let's look at like this leg where we have like a singular inversion. See if it worked here, of course. So we have 2 Fourier gaps in this leg here, 8 minute. And only 50 minute we have a singular one in this swing high to swing low. So right here, this will be your inversion. From here. And then we close with this candle above really. I think it did actually. So low of this candle is, look here, 17876.75, 876.75, and that is close 877.00. So we did close above here, and then Dodgy's strategy didn't allow for like a close back below this here, so we would get stopped out if you follow like Dodgy's setup. But still, let's say you did enter on here, your stop would be below this low because you have room for this Bissi. So we step the Bissi here, you wouldn't get stopped out, and from here it's just a reversal. And then also from here, if you could had like a ABS strategy from here, like a ABS standard deviation, we have like a to B leg from here. Doesn't really come in line anything. -1 standard deviation also comes perfectly again with this mean threshold, so that's just perfect. And then from here we also had another breaker. So we had a low, we had a high, we had a lower low, and then a higher high. From here we also had a breaker. So -2, -5 standard deviation also really comes close in line with this like mean threshold of the big order block. And this -1 standard deviation comes in line with like this high right here, so this could be your target. But this -2, -5 is pretty close to that mean threshold, so this would be my target. A really nice setup there. From there it's just pushing to the upside. Then we had Asian session here, creating a lot of liquidity. Like a perfect classic setup. We had like Asian session, equal lows, low resistance liquidity. We had our London manipulation leg. So we have accumulation, we have London manipulation, and we have New York distribution. So again, beautiful power of 3 setup. And yeah, basically for further this week, which I explained, -2, -5 standard deviation is right there. And that's kind of what I'm expecting. I don't want to see this low because smart money bought there. I wanted that stop to be protected. And from here I want to do my analysis on DXY. So if DXY, what we basically had is on NQ, where on like the 1 hour time frame, we're actually bearish. So on the 1 hour time frame on like DXY, we would be like bullish for like a small PED ray or small liquidity pool, which we are looking for. And from there on the daily, we're basically looking at like a lot of bearish displacement for DXY. For like, can we take out the low? Do we have like equal lows? The same here because we have low resistance liquidity on bear time frame on NQ. So we would be pretty bullish on NQ and then pretty bearish on DXY. So that's basically what we're looking for. So let's look for that. So what I said was we're pretty bearish on like the hourly time frames, and on DXY we should be pretty bullish on some time frames. So from here, what I'm already seeing is we have this inversion Ferrari gap, which is like a 30-minute, I think it was. Yeah, 30-minute singular one. So I don't ignore that, even though we have like the same 30-minute on the daily. I still use the 30-minute one because I want to see the 30-minute one reverse, and I know that once we inverse the 30-minute one, then we take out these equal lows, but still it's a 30-minute one, so I won't ignore that. But I could just leave this on here, leave that there. So basically what we did on DXY was we had like a push to the downside, and then we still had this Bissi acting as support, so still acting as a bullish PD ray, still acting as a normal Bissi. This made us step inside of this volume imbalance, and from there it was a just big push to the downside, also accumulation, manipulation, distribution. So from here, what I already want to see is, this is going to be our high basically, because we take out the liquidity here, we take out the equal highs. This is like, which is like perfect. So we take out the buy side liquidity. This is our manipulation leg, and now from here it's just distribution. So I don't want to see this high get taken out because this is where smart money is sold. But now I'm seeing we didn't still inverse this big Bissi here. We still didn't inverse it, so it's still acting as support. Also we're reacting off of, yeah, right here, reacting off a volume imbalance again. So you have like two volume imbalances. So from here, reacting off of there again. And basically what I want to see here as well, we wrecked off that volume imbalance. We swept this liquidity here. We swept this sell side liquidity, also creating equal lows here. Swept this liquidity here, and look what we have here. We have a singular. Is it on the right time frame? Yeah, right here we have a SIBI here. We have a SIBI here, so I look for a singular one. On the 30-minute one, we have a singular one. So right here, from swing high to swing low, we have a singular one. Right here. And yes, we have a SIBI here. We have a SIBI here. But basically what I'm looking for is I'm basically looking in. Oh wait, I am doing it wrong. Sorry. I am looking at like a singular one in this entire leg, because it's this entire leg where we're retracing off of. So we have a swing high to swing low. You have a singular BISI here, or SIBI here. We have buy side going above here. So we have buy side liquidity above here. This high is protected. That's basically what I'm anticipating, and what I'm for sure, I'm pretty certain that we had this manipulation leg and we don't want to go any higher than that. So what I'm thinking is, yeah, we do want to take the buy side liquidity out here. If I look at like this leg, I'm seeing like a breaker set up side of here. It isn't really that clear, but we do have a breaker here. So this A to B, that's just perfect. This A to B leg standard deviation, -2, -2.5 standard deviation, it comes to like this buy side liquidity here. B to C leg, standard deviation, -1 standard deviation, it doesn't really line up with anything. You could have it at like, oh, that's just, that's crazy perfect as well. This -1 standard deviation comes in line with this SIBI constant encroachment, so that could be a draw on liquidity, but I don't really use SIBIs and BISIs constant encroachment that much. Really haven't used that. I just like it when we have liquidity inside of like a SIBI. I just use the -2 -2.5 standard deviation. If it's like lining up perfectly with it, then I'll just use this. It could be that the -1 standard deviation would be better or like more accurate. That could be also, but I don't really care, because I know that we want to take out this high, so it isn't really like that big of a difference, basically. So I'm removing this constant encroachment of that SIBI. Let's go back to the daily, and basically what we had was, if you look at like a weekly where we are now, so time is lining up with what we have. Then we have this low resistance liquidity, we had this drawn liquidity. We had a standard deviation. So let's say like we're anticipating this to be our breaker. Then we have this daily BISI, which I want to see get inversed. I think we actually did inverse it on the daily, but it's a 30-minute one. Wait, it was, right? Yeah, it was. So we have the 30-minute inversion, so it isn't still inverse on the 30 minutes. So that's basically what I'm waiting for. But let's say this is our breaker, then I'm anticipating this to be the A, B, C, and this I'm anticipating this to be the C, D leg. Sorry, this is our C spot. From there, the B to C leg standard deviation, -4 standard deviation comes perfectly in line with this drawn liquidity. And it's also going to be like no, not here. It's like a daily breaker from here. So I kind of want to see this standard deviation get put into work here, and then this -2 -2.5 standard deviation comes in line with this rejection block high. I'm still leaving this rejection block on here because it could act as a speed bump. So it's a rejection block off of the monthly. So we don't have this candle overlapping. It's the lowest candle here. This candle doesn't tap inside of the constant encroachment. Even though we tapped in constant encroachment, this candle, it doesn't really remove it. And then this candle did tap inside of this candle. That doesn't count as a rejection block. So basically, this is what I'm anticipating. And this would come in line with like what we had on the indices, or like NQ. So we had like a 1 hour. I'm pretty bullish until we get this buy side liquidity. Also with NQ, I'm pretty bearish until we get this sell side liquidity here. I don't want to see us take out this low. Same thing with DXY. I don't want to see us take out this high. And then from there, I'm actually pretty bearish on DXY. And NQ, I'm actually pretty bullish. So from NQ, I really want to see us take out this low. I want to see us react off this constant encroachment, or just overall this rejection block. And from here, I want to see a market make a buy model, taking out this low resistance liquidity, and finishing this -2 -2.5 standard deviation. And that's basically it. That's basically it. We also have a BPR here, which is unlike the monthly. So we have a BISI here, we went through the BISI here, we had displacement lower, also another SIBI overlapping with this BISI, so that makes this a BPR. So from here we already reacted off of that BPR, BPR overlapping with a normal SIBI as well. And then I already had like my my analysis for like a bigger time frame, or like the monthly and 6 month, 12 month. Yeah, this is basically what I'm anticipating. Even though we have like a low resistance liquidity here, it doesn't really line up with what I want to see on NQ. So I don't really expect us to run through a BPR and then from there find support again and then take out these highs. I don't want to see that. If on bigger time frame, if like look here, again I'm going back to these time frames, but so in the monthly we did tap on this candle. We did already tap inside of this rejection block again. Tap inside of like right here we tap inside of this SIBI again. We had displacement lower, we react off this rejection block, so this is going to be a speed bump. Here's going to be buy sell stops we need there. So just more generated liquidity. From here we want to react off a premium. From there smart money is going to reverse price after there, it's going to sell there, and from there it's want to take out it's want to buy the sell stops for smart money. And that's basically also that BISI here on bigger time frame, which is like a singular one, or like on the 12 months this is a singular one. So smart money is again probably gonna buy here, and then from there we're gonna ride it all the way to the upside again. But that's like a really big time frame, because this is a 12-month time frame. But basically that's what I'm expecting, and yeah, that's basically it. So no trading on Monday, no trading on Tuesday, probably trading on Wednesday, probably trading on Thursday, and on Friday also no trading. So yeah, that's basically it. Yeah, I'll probably see you guys upcoming week, somewhere on Wednesday or Monday or Tuesday. If anything happens in like those accumulation days, then I'll show it and I'll discuss it and give my opinion on it. And yeah, that's basically it. But yeah, I'll see you guys probably on one of those days or Wednesday again. So yeah, bye.